Hello, everybody, and welcome into Tim Talks Stocks. My name is Tim, and today we're going to be talking about swing trading the markets in the week ahead. Now, I haven't really found a lot that I like for the week ahead, but there are some things. Let's first just look at the overall SPY. We are in a considerable downtrend. We've been in since around the first of the year. Last week was a mess, ending on Friday where we gapped up to sell off of that resistance point right there. I got to think we're going to look for the bottom around 410 in the early portion of next week. Nothing's for certain, though. Check out the Qs. The Qs did largely the same. They largely just mimic what the SPY does, but yeah, we had a big sell-off in our trend that we've been in. Facebook. Don't love Facebook. Look at these. I mean, these candles. We got a couple of big candles, but for the most part, they are quite small. That being said, we are coming to a head at this point on the chart. Either we sell through the 186 level or we pop up. What the pre-market looks like on Monday morning is going to be indicative of how the next 3 weeks of this stock look. We could chop, we could pop, or we could drop. Drop is the best alternative for day traders, swing traders. If it falls off, that's going to give a better opportunity than getting back into the chop. For example, I mean, look at this. Selling off, there's no support for, since pre-pandemic. And if we hit down to 137, it's a $50 drop. There's got to be other levels in there, but that's the most obvious sitting right there. All right, we're going to look at oil really fast. Chevron. Boy, you're being slow. Chevron, like the other oil stocks, has popped. It is going straight up, lots of candles, but we've hit this resistance point at 170, 171-ish. But the overbought condition of the stock is it's likely to cause it to sell off. Now, it might just be a fake out to get the stock below the overbought level, the 70 on the RSI, but it's going to have to come down to get us into normal territory, and then we might go back up. We might run again. But in my opinion, I believe that this stock is going to have to come down a bit. Oxy is the same way. It's the stock that's gotten the most pub out of this run where we're going parabolic, but this one, not as much. At least, I mean, it obviously is, but the chart doesn't look as good as Chevron did. A lot of these candles where it gaps up to sell off. Gaps up to sell off. I hate that. But this is a much more dramatic view because we're actually making contact with the 9. As the 9 creeps up closer to that candle at the $57 mark, $58 mark, you are going to see more and more volatility, and it could pop. But when you see the RSI over the 70 level, you typically are going to need relief before you can pop again. We're like a DocuSign. DocuSign, I day traded on Friday. We caught support right here. And if we get a strong buy signal on Monday, could and should equal a gap fill. I'm sorry, I bumped my mic. Should equal a gap fill for us. So that'll be something that we look into. Foot Locker, Foot Locker's range trading. I shouldn't have this on here. We're going to get rid of it. Tilly's had a gap down on Friday. So it's going to be largely the same deal as DocU. It's just a $9 stock, so I'll probably wind up staying away from it. So listen, we're getting out of earnings season. The earnings calendar largely looks like garbage. So we need to be patient. And if we're swing trading, we need to make sure that we're trend trading with the SPY. And if we're not trend trading with the SPY, we need to make sure that we're using a catalyst that is fresh, that is very strong. And even if the news is fresh, the rumors need to have not existed for months in advance. For example, Oxy. Oxy's been running up for a myriad of reasons, but we've known for months that Ukraine and Russia were going to have a conflict. Russia was mounting troops at the borders in January. So what did we do? We ran up. And then the day that Biden announced that he was no longer going to buy oil from Russia, we saw a massive sell candle. It popped up, but a massive sell candle. And seeing candles like that where your stock drops, I don't know, $8 on a $50 stock, that can be terrifying. That can be something that causes you to exit a trade prematurely. You want to be very careful about the stocks that you are trading right now. We are in the middle of a range on the SPY. We are in a volatile geopolitical landscape. There aren't a lot of stocks that are premier swing trading stocks right now, and we're leaving earnings season. So just be careful. Go through the financials, not the financials. Don't read any reports, but make sure that the numbers make sense as well as the charts. For swing trading, day trading, we don't give a shit about the numbers, but make sure that the numbers make sense as well as the charts. Because this could be a dangerous part of the season. Now, that's going to do it for swing trading today. Sorry it's so late. It's been a busy day, and we lost an hour because of Spring, thy bitch that she is. So we'll be back tomorrow morning and discuss pre-market day trading targets. Hopefully we have some gap downs with some big volume that we can day and even swing trade potentially later on in the week. So if you guys wouldn't mind liking and subscribing to the channel, liking the show, commenting below, doing all that good stuff, it'll help me do better. Also, if there's things that I can improve upon, that I can actually improve upon, let me know. If you have any questions, again, I'm not licensed. I'm just a guy who likes to talk and has a joy for day trading. So, again, I'm not licensed. If your stocks fail, this is your fault, not mine. I'll come up with a legal disclaimer next week. But you guys enjoy your evening. I'm going to go eat some lasagna. Peace.